In Consumer Corner, we take a look at the trends and products that are creating a buzz in China today. A recent tweet has fueled plenty of online chatter. Du Meng, an independent economist and president of China Enterprise Capital, posted that the average home price has gone up by 143% since 2003 to a level of 5,791 yuan, that's $930 per square meter. Back then, the average cost per square meter was only about 2,400 yuan, or $382, an average annual growth of 10.3% in the past decade. But many disagree on how big the rise really is. Yangcheng Evening News quoted Qing Yi, chief economist at Hung Tai Securities, as saying the average selling price of new homes has risen slightly over 13-fold in 25 years from 1987, an average of 55% per year. This result was worked out based on a report by the National Bureau of Statistics. NBS published the very first official data of China's real estate back in 1987. And since then, people keep asking questions about housing prices and whether there is growth year on year. The report by NBS lists the national average every year since 1987. Data showed the average price of new homes in 1987 was only 402 yuan, about $65 per square meter, while 25 years later, it had jumped by 14.4 times. The figure saw its largest year-on-year gain of 29.8% in 1993. Only two modest slides were monitored, in 1999 of about 0.05% and 2008 of about 1.6%. Analysts attributed both drops to the world financial crisis. Interestingly, no downturn was seen in the years when China's central government came up with something new in an attempt to cool down the property market. Not even years when property sales declined, 1989 and 1986 and 2008. These figures are a sobering reminder that for all the so-called progress made in recent years, the inflation pressure has still been mounting. According to Du, the short version of housing is that the upward trend in the cost of housing prices is the result of, quote, objective laws and economic forces, and that housing costs will rise despite tighter housing regulations. While many disagree with Du, almost everyone is trying to understand what's behind such a breakneck rate of growth in the property market. Wu Danhong, a renowned Chinese legal scholar, said that the decade-long home price boom was partly because of commitments that the State Council, China's cabinet, made to designate real estate as a pillar industry way back in 2003. At that juncture, the State Council was hoping that growth in real estate would be coupled to and further boost general economic growth. But there were trade-offs, as always, and the government's earlier wishful planning for the housing sector has today left most home buyers frustrated in a sizzling hot housing market. As a result, only 20% of citizens can apply for affordable housing, while 80% could have moved into homes of their own if not for the earlier decisions. When China gradually eased property ownership restrictions in the past, its citizens tended to respond by pouring money into housing. The resulting growth was so red-hot that the government analysts became fearful of an impending bubble in real estate. But more recently, after the controls of 2010, China's real estate market began to slow amid government efforts to rein in speculators and prices. The control measures included higher down payments, tough qualifications for mortgages, residency requirements, and limits on investment purchases. The resulting slowdown spurred developers to offer discounts to unload their unsold inventory or to expand their reach into third and even fourth-tier cities. Spooked by falling prices, would-be buyers stayed on the sidelines and investors mourned declining valuations. Well, that situation didn't last very long, as speculative investors found their way back to major cities, the hotspots for housing regulations. The latest data by the NBS shows that home prices last January picked up in 54 of the 70 cities tracked by the government. The average year-on-year price change was an increase of 0.6%, the first upward acceleration in 11 months. January's increase is likely attributable to loosening monetary policies and a relative excess of liquidity. each general stimulus measures recently taken by Beijing to combat a slowing economy. The recent rise has pressured the government to introduce, quote, timely curbing measures, but with investors focused more on profitable rather than affordable housing, the huge pent-up demand is unlikely to be met anytime soon. Even if China can get its control policies back on track, housing prices will likely maintain at least some upward momentum. Reports on the astonishing trajectory of China's real estate market over the past few years has stirred up plenty of online chatter. One poster worried seriously about what's going to happen down the road given the current trends. She wrote, "Very soon people will have to take out a mortgage from birth. I feel terrible just thinking about this future of indebtedness we are rushing to lock ourselves into." Another netizen pointed the finger to ineffective measures by the government. He wrote, "Despite 9 rounds of regulations in 10 years, housing prices only get higher and higher. Price control is just like a coiled spring. The harder it's squeezed, the sharper the rebound of prices. When will the government actually knock the pegs out from under price speculators? Prices won't fall by only pinching consumers at the benefit of special interest groups." Don't go away. Up next is Guess the Price.